Did you feel like something massive just shifted in the global economy? Because you're absolutely right. We're witnessing what could be the most significant financial realignment in decades. And it all started with a single announcement that's reshaping how money flows around the world. Picture this: massive investment deals worth trillions flooding into American markets, trade wars suddenly cooling down, nuclear tensions diffusing overnight, and cryptocurrency officially joining the financial mainstream. If this sounds like a coordinated reset of the entire economic system, that's because it might be exactly what's happening. The dominoes started falling when diplomatic breakthroughs in the Middle East triggered unprecedented investment commitments, flowing directly into the United States economy. We are talking about sovereign wealth funds placing multi-trillion-dollar bets on American innovation, defense, and infrastructure. But this isn't just about oil money anymore. This represents a fundamental shift in where the world's wealthiest nations are parking their cash. What makes this moment so crucial is the timing. While many investors have been worried about de-dollarization and the rise of alternative economic blocs, we're seeing the opposite happen. Major economies are doubling down on dollar-denominated investments, suggesting confidence in American financial stability that we haven't seen in years. The Middle Eastern investment surge represents something unprecedented in scale. Saudi Arabia alone committed hundreds of billions across defense, artificial intelligence infrastructure, and partnerships with major American technology companies. This isn't just about buying products or services. These nations are essentially betting that American innovation will drive the next decade of global growth. But the story gets more interesting when you consider the broader geopolitical context. Just as these investment announcements were made, we witnessed successful diplomatic interventions that prevented potential military conflicts between nuclear powers. The speed at which tensions were diffused suggests sophisticated behind-the-scenes coordination that prioritizes economic stability over regional disputes. This diplomatic success created immediate market confidence. When investors can predict stability rather than worry about unpredictable conflicts, capital flows more freely toward growth opportunities. The correlation between these peace initiatives and subsequent market rallies isn't coincidental. It demonstrates how modern economic warfare relies on strategic alliances rather than military confrontation. The trade dynamics shifted dramatically as well. After months of escalating tariffs that had markets nervous about supply chain disruptions, we saw a sudden de-escalation that caught many analysts off guard. Tariff rates that had climbed to punitive levels were slashed to more manageable percentages, instantly relieving pressure on international commerce. This tariff reduction triggered immediate market euphoria. Major indices posted significant gains as investors realized that the feared trade war scenario was being replaced by managed economic competition. Companies that had been bracing for margin compression suddenly found their cost structures improving overnight. Perhaps most symbolically significant was cryptocurrency's official entry into mainstream American finance. For the first time in history, a major crypto exchange became part of the traditional stock market index system. This development signals that digital assets are no longer viewed as speculative fringe investments, but as legitimate components of the financial ecosystem. The inclusion of cryptocurrency companies in major indices means that retirement accounts, pension funds, and institutional portfolios across America now have automatic exposure to digital assets. This creates a massive new source of steady demand that didn't exist before, fundamentally changing the investment landscape for cryptocurrencies. Bitcoin crossing the $100,000 threshold again reinforces this mainstream acceptance. Unlike previous price surges driven by retail speculation, this rally appears supported by institutional adoption and systematic integration into traditional finance. The psychological barrier of six-figure Bitcoin prices has been normalized remarkably quickly. From an investor perspective, these developments suggest we're entering a new phase of market behavior. The combination of geopolitical stability, strategic economic alliances, and institutional cryptocurrency adoption creates conditions that favor long-term growth over short-term volatility. The key insight for individual investors is understanding that this isn't just another market cycle. The fundamental infrastructure of global finance appears to be evolving. Countries are choosing economic partnership over confrontation, traditional finance is embracing digital innovation, and capital is flowing towards stability rather than speculation. My personal approach reflects this new reality. I'm maintaining consistent investments in broad market indices because American companies benefit directly from these massive foreign investment flows. When sovereign wealth funds commit hundreds of billions to American technology and defense companies, those investments don't just sit idle. They fuel research, development, expansion, and ultimately higher stock prices. I'm also maintaining cryptocurrency exposure not because I expect explosive short-term gains, but because digital assets are becoming permanent fixtures in the global financial system. Every month that passes makes this integration more irreversible. However, I'm also keeping more cash reserves than usual. Not from fear of market crashes, but to maintain flexibility if opportunities arise. These reserves are invested in short-term treasury bonds, earning steady returns while remaining accessible for strategic deployment. The biggest risk right now isn't being wrong about market direction. The biggest risk is being unprepared for the scale of change that's happening. Whether this represents the beginning of a new economic golden age or a temporary alignment before more volatility, the signal is clear. Money is moving, alliances are shifting, and a new financial era is emerging. For investors with long-term horizons, staying engaged rather than sitting on the sidelines appears to be the more prudent strategy. The convergence of diplomatic success, strategic investments, and financial innovation suggests we're witnessing something truly historic unfold in real time. Now, if you thought this dollar reset was earth-shattering, you won't believe what's happening next. The bond market is literally collapsing. In our previous video, we break down Jamie Dimon's urgent alert on how bond yields are spiraling out of control and why that could trigger the next market meltdown. Don't miss these critical insights before you reposition your portfolio. Click the link on screen now or check the description to watch that deep dive and stay one step ahead of the next financial crisis.